Get stuck into some of the detail that we're watching there. One of those I want to start off with is Flight Centre, and we might actually bring in Chris Conway from the Australian Stock Report, who joins us live from our Melbourne studio. Flight Centre, Chris, up over 10% now. Really good result, solid result it looks like, even though net profits were down about 5.6%. I suppose looking like these airfares are normalising after what's been a period of heavy discounting. Is that really what the market's liking today?
Good afternoon, Leanne. Yeah, look, I would think so. Obviously, Flight Centre had pre-guided, so the numbers today weren't really a surprise at all. It's nice to see that they didn't miss. Of course, I think it was something like 5 downgrades they've had in the last 3 years. So it was nice that after updating the market a couple of months ago, they didn't miss those numbers. But yes, look, in terms of, I think, people reading through these numbers and looking forward, it's all about airfares normalising, like you say, after that period of heavy discounting, which of course crimped Flight Centre's margins. But they've also come out with a cost-cutting program, and they've announced today that they're looking for 7% growth in total transaction values each year for the next 3 years. So they've given the market something to like, and they've delivered on what they said they would, albeit only a couple of months ago. So I think that's, largely why you're seeing that pop today.
What about for you, Adam, a thought on Flight Centre and obviously that big move up there today, as Chris mentioned? Obviously it's been a disappointing one along the way, but yeah, good result it seems.
Look, yeah, I mean, yeah, absolutely, it has been a good result. We've been looking to sort of take some profits in this one. We've still got to buy on it officially at Shaw & Partners, but we are looking to take a profit. We were sort of in the stock around that $30 mark. It's now sort of hitting that $49.10. So yeah, we're looking to take some profits in this one. Not that taking anything away from the business and the management. I just think that with this pop today, it's an opportune time to get out.
Okay. Chris, let's move on to, there's quite a lot to get through really, and I just wanted to move on to some of the miners, the energy companies in particular. I'll come back to South32, but perhaps we can start with Santos. It's off about 0.7% at the moment. Just your thought, and of course with all these miners, it's the outlook guidance that's been so important, but of course, it looked like a fairly messy result as well.
Yeah, look, a fairly messy result from Santos. Obviously a lot of impairment charges. Again, a lot of it was expected. I think to their credit, the board has done what they at least said they would. It's been all about cost cutting. It's been all about just righting the ship, if you will, bedding down the things that they're good at and still good at, rather than aggressively seeking growth or trying to expand, which is what they had to do and what all mining and energy companies have had to do over the last 12, 18, 24 months, some of which are a little bit further down the road and they're reaping the benefits this reporting period, whereas Santos is still a little bit behind the 8 ball. But I think they're doing an okay job. There's probably still too many risks around for me in order to be a buyer. But it was nice to see also that they increased their sales targets today, which I think is accounting for that miss on the profit line.
Yeah, would you agree with that, Adam? And I think they've also maintained their production targets there as well, so increasing their sales guidance. Do you think that has offset that perhaps weaker result?
Yeah, look, it has, and I think they're focusing a lot on the Cooper Basin, which is where they're sort of, I guess, pinning a little bit of hopes on it. Paying down debt is the big thing for these guys, and which they have been doing. I think I'm in agreement. I wouldn't be buying it just yet. I still think that we'd like to see this. However, it is very leveraged to the oil price. So if we do see a tick up in the oil price, we'll see Santos move. But it's all about balance sheet, and that is still under repair.
Yes, yep, okay, challenging times continue there for Santos perhaps. Can we talk South32, Chris? The stock's doing pretty well there today. Of course, another one that's really benefited from the uptick in those commodity prices, and as has been a similar case with a lot of these miners, a huge amount of cash. I think the big question is, what do they now do with all of that cash sitting on their balance sheet?
Yeah, look, I couldn't agree more, Leanne. It is absolutely about what they do with the money that they have stockpiled now. I think it's $1.6 billion they have in cash sitting on their balance sheet. Obviously, they have returned some more of it to shareholders. They increased their capital management program by $250 million today. There was some in the market that were expecting that to be greater, up towards $500 million. Look, a really interesting time for a lot of these companies that have a lot of cash. Some other analysts on the show earlier today were saying, they've sort of got to do something. I don't quite fall into that category. I mean, recent history is littered with companies that, admittedly, whilst they bought at the top of the cycle, splashed a lot of cash on, assets that haven't had a return. Mr. King over at BHP has just paid the price exiting the board from things that he did at Origin. in terms of paying too much for assets that haven't yielded a good return. So as a steward of capital, I would much rather the board of a company, if they have cash, is to wait and see if there are good opportunities worth pursuing, and if they can't find them, no matter how long it takes, then they decide to do with the capital what they will do then in terms of either returning it to shareholders or whatever it will be. So I don't think these companies need to be in any rush, and recent history would tell us that they needn't.
All right, fantastic. Look, we're going to have to wrap it up there, Chris. It's been a pleasure having you on as always. Thanks so much for joining us.
Thanks, guys.
That was Chris Conway joining us there from the Australian Stock Report.